Are you an existing or startup business looking for equipment financing loans to operate or scale your business? If so, are you also short on the funds to pay for it? Don't worry, because you're not alone. This is actually a major concern for many small businesses, especially during today's economy, as the world continues to recover from the recent economic difficulties that affected almost all business sectors. In this video, we'll be discussing how business equipment financing may be the right solution for many business owners who find themselves in this situation. We will discuss everything from what equipment financing loans are, to how they work, who qualifies, advantages, drawbacks, and more. Before we get into it, I'd like to ask if you could help support our channel by liking, sharing, commenting, and subscribing to the channel. This helps us to continue to bring you new videos about how to grow your business with business tips and creative business funding, and we appreciate you. Let's get started. What is an equipment financing loan? An equipment financing loan is a type of loan that businesses can use to pay for both new or used business equipment. Some lenders, such as First Choice Business Capital, can help fund established businesses as well as startup businesses. The terms of the loan are usually very flexible, and the interest rates can be competitive depending on your situation. Interest rates can start anywhere from 6% to 10%, or even lower if you have an excellent credit history. In addition, businesses can often borrow more money with an equipment financing loan than they otherwise might be able to get with a traditional business loan. There are different types of equipment financing, the most common having fixed interest rates with set monthly payments. Equipment financing is a great option for businesses because equipment finance companies are typically able to finance up to 100% of your purchase. They usually offer competitive interest rates and easy standards for lending. This can allow startups and established companies to invest in expansion and day-to-day operations without having to make a major cash outlay. How do equipment financing loans work? Equipment financing loans are very similar to traditional business loans, in that they can provide businesses with the ability to scale and grow their business through some type of financing. However, the biggest difference between equipment loans and other types of small business loans, generally, is the structure. Equipment loans are usually set up as collateralized loans. That means that the equipment you're buying serves as the collateral for the loan, so if you can't make your payments, the lender can take back the equipment. This is different from a working capital loan, which is unsecured. With an unsecured loan, the lender can't take anything back if you default. They can only come after your business's assets or try to collect the debt through other means. Also, equipment loans are meant to finance a very specific type of purchase, such as the equipment you want to buy, whereas other typical small business loans are more for working capital, which you can spend flexibly. What are some other advantages of getting an equipment financing loan? Equipment loans offer several benefits. For one thing, you don't necessarily need excellent credit or a successful business history to qualify. That's mainly because the equipment acts as collateral for your loan, allowing lenders to lend to customers that may be at a slightly higher risk. It's also beneficial to your cash flow, since big equipment purchases can frequently take a large chunk out of your operating cash flow, which can prevent putting your business in jeopardy. Also, these loans have very little paperwork, unlike traditional loans, which saves time and allows you to get the funding you need much faster. Finally, most equipment loans are structured at a fixed rate, so you know exactly what to expect and can prepare in advance for the payments. What are the drawbacks of equipment financing loans? An equipment finance loan, as the name indicates, may only be used to finance equipment. This means that the money from an equipment loan will not be able to cover payroll costs, rent, or anything else. Another disadvantage applies to certain equipment that may become obsolete or depreciates relatively quickly. Therefore, equipment financing to own versus equipment leasing may not be the best choice. However, long-term equipment is typically more cost-effective to own. The other finance option to consider is equipment leasing, which solves the depreciation factor, and we can help you with here at First Choice Business Capital. Who qualifies for equipment financing loans? As you can see, equipment loans are a great option for many business owners for a variety of reasons. Among them is the fact that the requirements for getting one are not too difficult, and this means that many small business owners, including those with bad credit or businesses that haven't been in business very long, are usually able to qualify. Overall, different lenders have different qualification requirements for equipment financing. However, as a general rule, most lenders are looking for those with a good personal credit score and a fairly good history of generating revenue. If you are an established business, you'll need to provide 3 months of bank statements when you apply, so they can judge your cash flow. Equipment loans are also available for startups, but you'll need to show a decent track record of cash flow, and you may be required to put down a larger deposit. Also, as a startup business, you will need to prove that you have a solid history of experience in your industry. The best way to determine if you will be eligible for an equipment financing loan is to reach out to a reputable finance lender. They will be able to assess your individual financial situation and give you a better idea of your chances of approval. You can contact us here at First Choice Business Capital by checking out the link and contact details in the description below. What can equipment financing loans be used for? As the name suggests, equipment financing loans are typically used to finance the purchase of equipment for your business. This could include anything from new or used machinery to vehicles, office furniture, medical equipment, farm machinery, restaurant equipment, commercial vehicles, computers, software, and more. How to find the best equipment financing loan for your needs? The best way to finance a loan is to work with an established and reputable lender. At First Choice Business Capital, we specialize in helping business owners secure the funding they need quickly and easily. We offer a wide range of financing options, including equipment financing loans, and we can help you get the funding you need in as little as 24 hours, in many cases. To learn more about our financing options and to apply for funding, please call 877-235-0672 or visit us at firstchoicebusinesscapital.com.